think you're going to see, just for the same reason stocks get hit in recessions, which is lower liquidity and broader market volatility, and liquidation of risk assets. I think Bitcoin would be in that boat as well. And so where you have this period of relative stability, nothing really breaking too seriously to the downside in the economy quite yet, I think you can see support. Interest rates have fallen, and that's provided a little bit of a boost for the NASDAQ tech assets and Bitcoin. But ultimately, I do think it's pretty susceptible if there is a meaningful move downwards. I don't think, crypto assets are going to be a safe haven.
We're talking about crypto market outlook, and we're going in depth with our next guest, Quinn Thompson, who is the head of growth and capital markets at Maple. Quinn, it's your first time on the David Lynn Report. Welcome to my show.
Yeah, thanks for having me, David. Great to be here, and been watching on the sidelines as you expand the show, and some really good guests. So excited to be a part of that.
Thank you very much. Thank you for being a part of my my program, Quinn. You've had a long career in traditional finance before working for the crypto space, and I want to get actually your perspective later on about the differences between what you've done in the iBanking before and what you're doing now with Maple. But first, let's get your outlook on the Bitcoin and crypto markets at large. Recent news coming out of just yesterday, I've been seeing articles like, oh, the Bitcoin bull run is over just because it's dropped under 30K. I don't know if that's overreaction by journalists or if there's actually some truth in the technicals. What do you think?
Yeah, I'm still kind of the belief that it's really all one trade of liquidity and tied to the macro environment. So, you can, wherever you have your Bitcoin or Ethereum prices pulled up there, you can have your NASDAQ prices right alongside it. And whichever direction one moves, the other is probably going to go in. There's obviously been a couple of idiosyncrasies around the recent Ethereum upgrade, and for a second there, Bitcoin showed some life and correlation to gold throughout the banking crisis, and it did shine. So got to give it credit. But I think as cost of capital remains elevated, the Fed's higher for longer, the same headwinds that trouble the NASDAQ from kind of breaking out towards all-time highs and this recent range, I think will continue to stick with crypto as well, and they'll trade very much in line probably.
The Federal Reserve, in their latest meeting minutes released last week, their staff projected that a mild recession could hit the economy later in the year. This was their projection. A lot of economists do share that view. Whether or not it's a mild or a more severe one is up for debate, but it's a point of discussion amongst crypto investors whether or not Bitcoin will survive any sort of economic downturn. Because keep in mind, in its history, Bitcoin has never really lived through a sustained recession. Discounting the 3-month recession we've had in 2020, which very quickly saw prices rise afterward. But what do you think is going to happen to Bitcoin, the price of Bitcoin, if we do have a recession, Quinn?
Yeah, ultimately, it does benefit from some of the characteristics of gold, meaning it's not an earnings, based equity or asset that you price off cash flow. And so you're deriving its value from, a safe haven, maybe a store of value, a flight to quality, a means to transmit value cross-border around the world. So there's a lot of different things people like to point to. At the end of the day, I take the Fed at their word. The Fed's been telling us for the last few months and even quarters at this point that they're expecting unemployment to rise. They're going to keep rates elevated. Every time there's a new SEP dot plot released, it's continued to trend upwards in the higher for longer camp. But the market's continually trying to front run. And so I think although Bitcoin can't hit an earnings recession where the cash flows decrease, I think you're going to see, just for the same reason stocks get hit in recessions, which is lower liquidity and broader market volatility, and liquidation of risk assets, I think Bitcoin would be in that boat as well. And so where you have this period of relative stability, nothing really breaking too seriously to the downside in the economy quite yet, I think you can see support. Interest rates have fallen, and that's provided a little bit of a boost for the NASDAQ tech assets and Bitcoin. But ultimately, I do think it's pretty susceptible if there is a meaningful move downwards. I don't think, crypto assets are going to be a safe haven.
It is interesting how you brought that up. You're expecting the correlation between risk assets and NASDAQ and other stock indices to remain with Bitcoin. Is that correct?
Yeah, that's right. Exactly. I think that, part of it is what the actual fundamentals are. And then, which I would say Bitcoin's fundamentals, eventually the hope is that it kind of trades more in line with gold as the store of value and uncorrelated asset. But in the meantime, when you talk to, portfolio managers, asset allocators around the world, it's viewed as kind of this tail end of the spectrum risk asset, like further out the curve of traditional tech VC or other investing in that space. So it's very difficult to see meaningful capital inflows into this industry. And not to mention, there's a number of regulatory overhangs and idiosyncratic risks that I would say plague the industry. So it's tough to see it breaking out too far to the upside. I think it's had a pretty solid run here, and now it's meeting some resistance that I'm not chasing at this point.
So your thesis is that Bitcoin has primarily been driven by macro factors. Is that correct to assume?
Yeah, if you plot it against, say, ARK, the Kathy Wood, kind of longer tail tech ETF, or even just the Nasdaq 100, it's very, very highly correlated. If you plot it against, say, gold, the relation is less clear. There's bouts of trading, month, 2 month timeframes where it does look a little bit more like gold, but for the most part, you can kind of throw it in the bucket of longer tail, tech equity kind of.
Now, give us some macro indicators or variables that would need to be shown in order for you to be very bullish on Bitcoin. Then you've mentioned, I believe that you think that $30,000 is a key support level. Now, in order for us to breach to perhaps 50K, where I've even heard 100K this year, what needs to happen in our economy for those levels to be reality?
Yeah, I think what needs to happen is you need to see the Fed, a little bit more content with their efforts thus far. And I'm not saying that it's just solely the Fed actions, because the funny thing is the Fed began their hikes in March of 2022 when inflation was already over 8%. The balance sheet peaked in April, so a month later, just over a year ago now. And so inflation only peaked 3 months after, 3 months after that in June, and has been coming down since. Meanwhile, the Fed has been raising rates, 500 basis points, set to do another 25 next month. And so the cure to high prices of inflation is high prices. And, it was already on the way down due to, both decreased demand, but also the supply chain being straightened out and brought online. And so the metrics that I would look for, to get bullish again on Bitcoin and risk assets is really, it's honestly an economic event that's to the downside that forces the Fed to be more supportive and add liquidity in the markets. I think that's why we saw, the breakout around the banking crisis was the reaction was extremely swift. There was probably 2 trading days, I think, that went by. It was a Thursday and Friday, March, maybe it was the 9th and 10th. And the Fed came out on Sunday with basically an unlimited backstop for all banks in the FDIC system. So those are the types of, rapid movements to the downside in the market you want to see. And then the swift reaction. And it might start sniffing that out once, if the economic data starts to roll over and the Fed starts to cut rates. But ultimately, it's very difficult for it to really, really front run an economic recession, and ultimately you need the capital flows behind it to support it, and that's going to be when the Fed turns the spigots back on.
I'm sensing, Quinn, that you are not super bullish on Bitcoin this year in the sense that you're assigning a low probability of Bitcoin breaching new all-time highs by the end of this year. Am I correct to assume that?
Yeah, the situation that happens would be basically, another 1 or 2 banking crises and the economy really, really going downstairs. But the one thing I would say is interesting is relative to other crypto assets. And so this is diving a little deeper, maybe beyond people that look just broadly at the space. I think Bitcoin and Ethereum do have really positive stories to tell on a relative basis. I think, they remained the bellwether assets that new entrants into the market consolidate to, and it's the kind of gateway in. And so what you're seeing is what we call Bitcoin dominance or Ethereum dominance, which is the percentage of market total crypto market cap comprised of either Bitcoin or Ethereum. That's been on a steady rise. And so if I have to pick something I'm bullish on within the ecosystem, that's what I choose, because there's just a flight to quality, as things are kind of stable here, and I think that'll continue to rise.
Is Bitcoin dominance a leading indicator for a bear market in all of cryptos? I'm just piecing the pieces together in my head. If one were to be bullish on cryptos, I would lever up on the altcoin market. But if Bitcoin dominance is gaining traction, which is to say that Bitcoin and perhaps ETH are gaining a bigger market cap of the crypto markets, like you said, flight to safety, that means people are bearish on cryptos, no?
Yeah, exactly. Bearish or neutral, meaning there's no more meaningful, there's no foreseeable meaningful inflows of capital coming to the space going out the curve. If you are looking to invest in new allocation, it's going to be into the most stable or, assets that have been around, Bitcoin since 2011 and Ethereum since 2016. And so you have that bit of peace of mind that, they've continued to perform well cycle over cycle. There's not many 3 to 5 year periods where the price hasn't risen. And so you can get pretty comfortable there. But as far as extending out the curve, I think one of the things we're going to need to see is a bit more regulatory stamp of approval before people start making more longer tail bets.
Can you go on a limb and give us a projection, Bitcoin up or down by the end of the year from current levels?
My gut says down, but maybe we say flat. So I can't be too big of a bear on my own industry.
Well, you're honest. I mean, most people have been pumping their own bags, so I appreciate your candor. I have heard the counter argument that actually the banking crisis, which you brought up, was bullish for Bitcoin and most of DeFi. And people point to the fact that Bitcoin's rally was sustained throughout the collapse of the banks that we saw. And perhaps that's because people now are more aware of the benefits of DeFi and the benefits of self-custody, which drew attention to Bitcoin. I don't know how much of that theory had anything to do with the price movement, but certainly it makes sense logically. What do you think?
Yeah, I think in that instance, we saw about a 3-ish week span where the drama was kind of unfolding. It traded in lockstep with gold. We saw gold, breaching 2K, kind of bouncing around there, trying to break out, it hits that 2K level 3 times in the last little bit here. So those, that was pretty encouraging. That I actually had been, for the most part, on the sidelines for the recent run until that event. I turned pretty bullish on Bitcoin coming out of that, because the Fed, it was this clear signal. The spigots are back on. We're willing to do basically whatever it took to backstop those banks, and that's going to mean growth and balance sheet and money printing. Unfortunately, for that continuation of that story, they actually did do a pretty good job. In behind closed doors, I would imagine there's a lot of patting on the back within the Fed as to actually quelling the banking crisis. I don't think the story's completely over. I think that this broader headwinds facing regional banks and the flock to money market funds out of banking deposits is going to remain. But as far as an immediate acute crisis, they actually quelmed it. And now we're seeing the balance sheet reversing again. We're seeing the board members starting to get rather hawkish again going into the May meeting. And so they're really trying to talk up the long end of the rates curve. And they definitely don't like seeing, S&P and NASDAQ pushing 2022 early to mid-year levels.
I'm very curious as to how traditional financial institutions currently view cryptocurrencies. Actually, even before then, you worked in capital markets for traditional finance. You were at Guggenheim, for example. Does Guggenheim own cryptocurrencies?
No, I think out of some of their macro and opportunistic funds within GPIM and Guggenheim Investments, they have traded the ETFs and GBTC and other crypto related assets, but never held it on the balance sheet,
What
unfortunately.
what was the attitude at the time when you were working in investment banking, and not just at Guggenheim, but overall on Wall Street towards cryptocurrencies? Was there a sentiment of distrust, or was there a sentiment of wonder and awe at this new emerging technology?
It's an interesting question because it's one of those things that's reared its head a number of times in cycles, and every time the price rises, momentum increases. You get a new influx of you know intellectual capital and human talent into the industry as people get excited about it. But each cycle, there's obviously it's kind of a two steps forward, one step back. And so I think it's becoming hardened and stickier as an industry. And people are starting to say, okay, this is something we need to incorporate. We speak with a lot of the big banks today. Almost everyone has a blockchain innovation lab of some sorts, probably 50 to 100, employees globally looking at the asset class and wondering how we can get involved. I would say, given last year's events, there's definitely quite a high level of skepticism. Given some of the bad players in the space that got weeded out. So they will be slow to adopt, and their main business is extremely regulated banking, and so they can't do anything to jeopardize that. Given where regulator stance is on it, but over time, it just is going to take way longer than anyone wants it to.
I've spoken to many people in the industry, in the crypto industry, very, very bright people who came from high-level positions from traditional investment banking, both sell side and buy side. The trend I've gotten is that the bright people who want to work for cryptos or on the crypto side leave banking and asset management to either found their own company or go to a crypto exchange or startup. I wonder when it's going to shift to a point where the banks, like you said, start directly competing with these companies. Certainly, they have the infrastructure and the manpower, the talent in place. Is it just an issue of regulation, or is it an issue of just not wanting to adopt?
Yeah, ultimately, they're going to do what their clients are asking them for. So you look at Jamie Dimon as an example, and JP Morgan. I think it was the peak in late 2017 where they announced they're going to be trading, or maybe this was Goldman trading digital Bitcoin futures. And then when things crashed, they discontinued. It happened again this cycle. Clients said, hey, as long as there's a revenue opportunity, they're going to figure out a way to launch a product around it. I would say they're starting to dip their toes. Some of these banks, Citigroup and Goldman, they actually have some venture arms as well looking at the industry and have made some investments either off the balance sheet or from their asset management business for high net worth and some of their clients there. So it's out there, it's happening. And there is some level of competition already, I would say, in the financing space where we compete at Maple is, some of the Bitcoin miners and some of these other, Consensus and other digital asset focused firms are actually accessing corporate accounts and credit lines within these banking institutions. It's very few and far between, but some of the more institutionalized businesses in the space are actually quite closely, in line with some of the larger U.S. institutions.
This leads me to talk about Maple, but right before that, Quinn, just broadly speaking, the banking sector, how is it evolving in light of DeFi, in light of AI, in light of other firms in the tech industry now offering financial services? No doubt you've read that Apple now has partnered with Goldman Sachs and is offering deposits at a 4.15% APY. It's very strange. The banking sector is facing a lot of competition from sectors you wouldn't have assumed would be in the financial services arena many years ago.
Yeah, it's definitely an infiltration. I mean, if you look at all the different kind of components of the economy, financial services have been the most difficult to penetrate from a technological perspective. And a lot of that has to do with the regulation and requirements that these, centuries old institutions are required to operate by and meet, which are a good thing in many respects. It maintains a lot of levels of stability within the system. However, I would say, what we're seeing with the fintech side of things is just more and more competition eating away at margins for the large banks. I think even within the investment banking world, you have the upstart of all these just kind of tip of the spear advisory firms like Guggenheim, my old shop, and some of that taking away the M&A fees from the banks. You're seeing liquidity in the public markets is waning a bit as everybody flocks to private capital within credit funds or non-bank lenders, private equity firms. So there's a lot of headwinds. I mean, the banks have basically become regulated utilities. They really don't have a lot of creativity in terms of what they can do, what they can invest in. It's if you want to be a globally systematic important institution, you're really hamstrung by extremely low risk requirements and a bit of a brain drain, but it happens over long periods of time where eventually people want to innovate, want to see new things. And, that's where you get crypto and other fintech innovations that I think, it'll be a decades long thing, but we'll start to eat more and more of the bank's lunch.
Well, is that the direction that the crypto industry is headed towards? A globally regulated, low risk, highly, or a very low innovation industry at some point after it matures?
I think we're probably a couple careers away from that point. We got a lot of those boxes to still check. So
okay,
I'll come back.
Still
to
early, yeah, still early days.
Yeah, when we're old.
Quinn, I want to talk a little bit about Maple and what it is that Maple works on. Very interesting company, debt structuring for institutional clients using blockchain. Tell us how that's different from traditional finance and debt structuring from a traditional financial institution.
Yeah, so basically, when you think of the structuring and underwriting itself, largely the same characteristics where the underwriters are performing due diligence, have a underwriting framework, looking at historical financials, meetings with management. You have legal accountants, everybody involved from the third party perspective, auditing the business and agreeing to loan agreements and legal documentation. But the real innovation is the actual infrastructure that it's built on. And so when we used to underwrite and arrange a loan or bond deal in traditional finance, we basically do the commercials and then kick it off to the back office operation team, which is 50, 60, 70 plus people who are then, doing the interest and account reporting, administration, settlement, funding, all these things that the blockchain really helps to make more efficient and optimize from a cost perspective. So the benefits you receive of funding on chain are, automated interest payments. There's no manual reconciliation. Oh, did this company pay this month? Are we still awaiting that? You can see it come in right into the blockchain address. Everything's downloadable. It's all immutable. You can't edit or fudge, records or fat finger a button as to when a payment comes in. And then there's also the tokenization aspect. So if I'm a lender funding these loan assets, they live on the blockchain. And so over time, that's going to evolve into a much more efficient, secondary markets environment and custody where I can trade, with instant settlement, my positions in these fixed income, investments or lends. And so that's still a bit off. We need the regulation and the legal infrastructure to catch up because at the end of the day, these are enforceable agreements in the court of law. And so we need to make sure they're recognized as such. But I think over time, more and more users and adopters of this technology will come into the space and see the efficiencies that it can provide.
I have a question about regulation and how that affects your sector and your line of work in particular. Gary Gensler recently in the hot seat testifying to Congress. He was grilled on his crypto regulations and crackdowns. Now, he said, Gary Gensler thinks that most cryptocurrencies are securities and should be governed as such. There's this turf war going on between the CFTC and the SEC over regulation. It's become more or less a partisan issue. But Gary Gensler has been asked about his approach. There's been opponents to his approach from, for example, French Hill. He said that I have deep reservations about the SEC's approach to digital assets, including its ongoing turf battle between them and the CFTC and its efforts to front-run bipartisan efforts in Congress to pass payment stablecoin legislation. So, broad question, Quinn: what are they doing with with regulations, and how is that going to change your industry once regulation develops and matures a bit more?
Yeah, it's a lot of, I think, blowing smoke at this point. Everyone's trying to, like you said, turf wars. Everyone's trying to stake it out, sound up to speed on the topic for their respective constituencies who's going to vote them back in. And these things really shouldn't turn so political. It's actually a technology that's very deflationary and cost cutting, which is helpful for the lower and middle income. It's got a lot of inclusion benefits from access to certain, investment types, or, access to financial services that over the years have become more restrictive. So yeah, you hate to see it become bipartisan, but at the end of the day, cool heads usually prevail. We saw this in early 2000s with the internet and .com boom. US had a kind of fork in the road. You can either accept it and embrace internet and innovation, or look the other way and look where we're at now, kind of the tech hub of the world because of it. So look, things like this recent stablecoin legislation bill, it's actually probably pretty decently written, and relatively supportive for the industry. And as we just get kind of younger blood and people up to speed, it's a big educational gap. It's difficult to expect every sitting congressman or senator to fully understand the extremely niche new frontier markets. And so it just takes time and education, and I think it'll get there. But at this point, given the turbulence that 2022 had on the industry, it's really at this point a quite bullish and positive thing for when reasonable legislation gets passed to embrace it, because that's what a lot of these big institutions need, is that stamp of approval before really going both feet in.
It's also quite remarkable to me how much attention it's gotten. The crypto industry overall has gotten in terms of press coverage, also attention from regulators. When you consider that the overall size of the crypto markets, which I believe is, I think, over $1 trillion now in market cap, is relatively small compared to traditional equities, fixed income, everything else that's tradable. It is an emerging economy, but certainly there's a lot more attention on this. Is it because of people concerned about the crime aspect, or why are legislators so worried about cryptocurrencies?
That's a good question. I think with technology these days, everything's just much more viral, and this is like a digital version of money, and it in some ways infringes a little bit upon a part of the economy that governments themselves really have a monopoly on, and for their own existence need to enforce all the rules they can. And so it's a touchy subject anytime you get into financial services, because that's the lifeblood of any economy. I think the U.S. capital markets is example one of that, why things are much more efficient than in access to capital, entrepreneurial activity. You're able to get funding if you got a new idea. So it's a control thing, and just hopefully most actors, I think, are looking at the consumer safety aspect of it and trying to protect people coming into the space. It has been very retail heavy, thus far, and so I think that's another area where it could create good talking points for their voters.
Final question, Quinn. Have you seen any recent developments on the technology front for blockchain that could prompt more adoption into the space?
I think it's the little things that are really going to push the space forward. Once you're able to, really, it's digital dollars, in my opinion. So the stablecoin bill is extremely, positive if it can get passed and get implemented. But once you're able to get your direct deposit, via digital dollars, once you're able to pay your mortgage via digital dollars, you pay your rent, pay your credit card bills, that's when all the economic activity starts to come on chain, because it's kind of like the internet. You never picked up a smartphone and you're like, yeah, this is too fast, too connected. And too inconvenient. I don't want to use it. It's like, how can I get the newest one? And that's the same thing when you utilize blockchains and digital assets. Once you kind of step foot in, you're pretty amazed with the technology and speed. And it's like, okay, how can I get this integrated with all facets of my life and get all my economic things this quick? And so just those little things over time.
I had my mom actually asked me about stablecoins and CBDCs last night, and she said, I've been hearing on the news that CBDCs are coming, and what is this? Does that mean I'm no longer going to use money anymore? And I told her, no, it's just digital fiat. But that makes me think there's a lot of education left to do for educating the public. Quinn, how would you explain digital currency, digital money to a layman? Using the example you just brought up, for example, trading or transacting and buying a home using a digital currency. How does that work? How is that different from what we can already do now?
Yeah, it's really the ledger or the reconciliation technique that's the difference. The problem is most people don't actually understand how our current financial system works. So when I put my money at a bank, I think that's my money. That's actually not my money. It's an IOU that the bank will provide me this money when I ask for it in the future. If you live outside the US and developing other countries, there's experiences that people, and that's why crypto adoption rates are much higher in these other countries. It's not always been the case that I put my money in that bank in Argentina, and when I ask for it back, I get it. And so really, the traditional banking rails it's basically done on a ledger, kind of behind closed doors that you don't really see, and it's, kind of abstracted away. And so this brings that to the forefront. And I think as these types of economic or financial crises type moments bring that out more and more, where, okay, I should take a little more control over my financial situation and take custody of my assets. And so it's really just the mechanism for transmitting is done in a more digital friendly way. And so when you want to wire, someone $1,000, or you want to go pay off a bill digitally, instead of taking 2 to 3 days for ACH, or, paying $25 for a wire fee, it happens instantly with no, very, very few fees, talking $1. So that's the biggest, when you start to use this stuff, you kind of realize the behind the scenes changes.
Okay. Well, Quinn, I appreciate your time. Excellent insights. And I look forward to catching up with you next time. Thank you.
Yeah. Thanks a lot, David.
And thank you for watching the David Lynn Report. Stay tuned for more, and don't forget to subscribe.